Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. For the week ending August 19th, 2022, the market started the next down leg in this bear market. In healthcare, biomedical, healthcare, and drugs all declined. In media communications, internet and media declined. On the bear side, telephones declined. In technology, electronics, software, computers, and semiconductors all declined. In the in consumer discretionary stocks, gaming, restaurants, leisure, retail, and autos declined. Household products advanced. In the financials, Wall Street, finance, savings and loans, real estate, and banks all declined. On the bear side, insurance declined. In the industrials, aero defense, machinery tools, building products, and chemicals declined. Waste management advanced. On the bear side, steel and metals both declined. In the others group, on the bull side, electric utilities were unchanged. Transports, textiles, business products, protection and safety declined. On the bear side, oil and gas utilities advanced. Oil services, food, forest products, and precious metals all declined. For the week ending August 19th, one sector was unchanged. 4 sectors advanced, 35 sectors declined. No sectors crossed from the bear to the bull side or the reverse, bull to bear side. There's still 30 on the bull side and 10 on the bear side. Overall, the market score declined from 63 to 48. For the week ending August 19th, 2022, the S&P 500 closed at 4228, down 51 points or 1.2%. The Dow closed at 33,707, down 54 points or 0.16%. Nasdaq closed at 12,705, down 342 points or 2.6%. This week, 69 stocks went from buy signals to sell signals. We lost 4 listings. There are now 44% of stocks on buy signals and 56% on sell signals. Overall, the market score last week was 63. This week it's 48. In summary, consumer discretion has led the way up in the 4-week rally, and tech and the industrials were right behind consumer discretion. But semiconductors, usually the tech leader, showed extreme weakness last week in a rising market. Not a good sign at all. The industrials and financials are next in this rally. Healthcare had the lowest losses this year so far, but have not been big winners in the rally. Media communications have been the biggest losers this year, and rightfully so. Social media has been leading the sector down. This week, the start of the next leg down in the markets began. Media communications continue to show the most weakness, followed by real estate and basic materials. For the first 33 weeks of 2022, the S&P 500 is down 11.3%, and Nasdaq is down 17.13%. Energy is up 43.21% year to date. For the first 33 weeks of 2022, healthcare is down 5.6%. Media communications is the worst performing sector, down 24.5%. Technology is down 14.8%. Consumer discretionary stocks have lost 16.3%. Financial stocks are down 8.6% for the year. The industrials have had a strong rally and are now down 5.4% for the year. Real estate's down 13.76%, and basic materials are down 12.6%. For the past week, the S&P 500 was down 1.2%. NASDAQ lost 2.6%. Energy was the best performing sector, up 1.3%. Healthcare was down 0.5%. Media communications was the worst performing sector, down 3.1% for the week. Technology lost 1.7%. Consumer discretionary stocks lost 1.4%. The financial stocks lost 1.7%. The industrials were down 1% for the week. Real estate was down 1.9%, and basic materials were down 2.4%, the second worst performing sector. For the week ending August 19th, the 10-year U.S. Treasury bond yields ended at 2.989% after a fairly big rise on Friday. Week on week, the 10-year bond was up 14 basis points. For the week ending August 19th, West Texas Intermediate crude oil closed at $90.77 a barrel, down $1.32, or 1.4% this week. Wholesale gasoline, RBOB, closed at $3.01.8 from 3.046 last week. So wholesale gasoline dropped 0.9% this week. Subscriptions are available for $12 a month on an annual contract or $15 a month on a month-to-month contract. I've been producing the Slay the Spider Circle since 1998 and using it to manage private client assets. I've been nearly completely out of stocks for the past year. My portfolio performance is now well ahead of the S&P 500 and NASDAQ indices since I went into cash. That's the total idea behind Slay the Spider. Outperform the indexes in both up and down markets. Now is an excellent example of cash beating the market substantially. I'm looking forward to buying many of the stocks I owned previously at prices well below what I sold them for last year. I will then own more shares going forward, in some cases twice as many. Sure, there were a few stocks I wish I had kept, but in total, I'm more than happy avoiding this bear market.